Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Tuesday, June 13th, 2023, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, we see futures mostly higher. Dow futures are down slightly right now, down 3 points. S&P 500 futures up 5. NASDAQ futures up 50, so that recent relative strength that we've seen return to the NASDAQ is continuing so far in pre-market action. Crude oil prices up about $1.30. That's back above $68 a barrel. And the U.S. 10-year Treasury yield down 3 basis points, back to 3.73%. This morning is going to be the start of not only a big day, but the rest of a big week. We've got the May CPI report due out this morning at 8:30. By the time you get this recording, it will be out, so make sure you check on that. Market in the past has reacted pretty strongly to the CPI report. Of course, at this point, we've been seeing inflation kind of come down a little bit. Wouldn't exactly say it's completely under control, but it's heading in the right direction, which is what the Fed is looking for. Unless we go off track with that, I think the market probably is okay here in the near term. But right on the heels of this inflation report, we've got the Fed meeting. So we've got a 2-day Fed meeting that starts this morning. The policy statement will be out on Wednesday at 2 p.m. How does the market react to that? What does the Fed have to say? What does the Fed do? They've been talking about pausing. I believe they're going to pause. But there's still many out there in the camp think that we could still get a 25 basis point hike. I think if we get that, the market could be in some short-term trouble. There is a ton, I mean a ton of in-the-money call premium in the market right now because of this run-up. So many folks jumping in on the call side in some of the big areas where the market's been seeing leadership: technology, consumer discretionary, communication services. These are also areas that are heavily played in options. So we are seeing, I'll just give you one example, NVIDIA. NVIDIA has over $3 billion of net in the money call premium. The QQQ and the spiders, the SPY, these are the two ETFs that track the NASDAQ 100 and the S&P 500 respectively. Those two ETFs alone, right now, as of yesterday's close, by my calculation, have over $8 billion of net in the money call premium. That's just two ETFs. Throw in NVIDIA, you got two ETFs in one stock, and we're up probably above 11 billion, maybe approaching $12 billion of in the money call premium. That's just sets us up for risk because market makers are on the other side of those trades. And even though they likely have taken long positions to offset selling the calls that they've sold, there's still the possibility that we get a big reversal and market makers sell those long positions, possibly even short, and as a result, take the market down and eliminate a lot of that in the money call premium. All of that's a possibility. We've seen it plenty of times before. But then again, yesterday we get the breakout above 43.05 on the S&P 500, and that normally would indicate to me short covering. That is a major resistance level on the S&P 500. I'm sure there are plenty of shorts saying, hey, I'm sticking with my short position until that 43.05 level gets taken out. Well, it got taken out yesterday. So we've got shorts probably running for cover, and we've got all these other issues potentially that could bring the market down. This is going to be a crazy week. I said this should be July 4th week because of the fireworks that we could see throughout the week. I don't know where we're going to end the week or maybe into the early part of next week, but I do think we could see some extreme volatility, especially once the Fed announcement comes out and depending on what the Fed has to say. And again, that's Wednesday afternoon. Anyhow, let's take a look at what we're going to go over today, go through the agenda real quick. Daily market recap, talking technically, chart of the day. Got one in the aerospace group. This was a stock that I liked earlier in the year. It kind of went through a long period of consolidation. It broke out yesterday, so you want to check that out. Relative strength, looking from a sector perspective. What sectors? We know technology has been strong. Are there any surprises out there? I'm going to walk you through all 11 sectors. We'll take a look at that. Earnings spotlight, had a big one last night, got another big one coming up on Thursday. Those are the two big reports that I'm looking at this week. We'll take a look at both those charts and give you the reaction that Wall Street's taking to the one from last night. And then we'll wrap up with the three you must see. These are all three stocks that have kind of pulled back a little bit. Two of the three remain very strong within their industry group, one not so much. But on the charts, the absolute charts, they all look similar in that they've pulled back and they've been consolidating, not exactly participating with this big move that we've seen up in the market the last few days. So that's what I've got planned to go over today. So let's get started and jump into the daily market recap. So going to start off here with the Dow Jones Industrial Average up 190 points yesterday. That was more than 0.5%. Back up above 34,000, where we've seen some overhead resistance in 2023. Can we get through? Well, again, options expiring this week. I don't know, but I would have said the same thing yesterday with the S&P, and the S&P 500 went right through. Here you can see S&P 500, 4338, 93. That's up 40 points or almost 1% and getting through the August 2022 high. That, in my opinion, and I'll show you this in just a second on the chart, but that, in my opinion, ends the series of lower lows and lower highs from the cyclical bear market of 2022. And yes, I'm calling it a cyclical bear market. I've been calling it a cyclical bear market. I called it a cyclical bear market before it started. I thought that we were going to morph into a cyclical bear market, and that's what we did. June of last year, called bottom. I think we continue to go higher over time. I'm very, very bullish long-term, very bullish. All-time highs coming later this year, early next year. But in the short term, it's a little dicey. And I went over some of the reasons why. Economic reports, the Max Payne for sure, options expiring this week. These are things you have to be aware of, not just this week, historically. I've done all the research. I have every day's S&P 500 close since 1950 in an Excel spreadsheet. I've got all the data. When I say options expiration, you need to be aware. I'm not kidding. You need to be aware. And this is going to be one unlike any other. So I don't know what we've got coming down the pike this week and early next, but we did have our Max Payne session. We decided to move it up a day, call it almost like an emergency meeting for Max Payne to go over with our members last night some of the issues that a lot of individual stocks and sectors are facing and major indices are facing as we head through this week and into early next week. But anyhow, NASDAQ 100 up 256 points. Another big move to the upside. This has been an unbelievable run so far in 2023. We were down below 11,000 in early January, and now we're approaching 15,000. That's well over 30%, and we're only a little more than 5 months into the year. It's been a massive rally. Mid caps up about 0.5%, up 13. Still holding on to the recent breakout level. That's good. Same with small caps, up 2.68. So on a percentage basis, only gaining a little more than 0.2%. So on a relative basis, when you look at small caps and mid caps, they did nowhere near as well as the NASDAQ 100, which has been the case throughout much of 2023. However, both have broken out. Both are holding their breakout levels. Wouldn't be surprised to see some money rotate back into those groups later this week or into next. Dow Transports needs to get through 14.5. Saw a nice little rally, breaking a downtrend line. I think we're going to hold the moving average, and I do think we're going to move back through the 14.5 level. So that's what I'd be looking for, and I think that will help the industrial group. Speaking of sectors, though, yesterday, technology and discretionary, the two big winners from Monday. Technology up more than 2%, discretionary up almost 1.75%. The laggard, energy. This has kind of been the theme of 2023. Technology doing well, discretionary doing well, not as well, but it's really picked up here in June and has continued to strengthen. And then you've got the flip side. You've got the energy, you got materials, you got the defensive groups that have not performed as well. And you can see energy struggling to get back through the 50-day moving average, rolling over back to 80.55 yesterday. 20-day moving average, though, is at 80.09. So still got the 20-day below to hopefully hold energy with some support there. Need to break back up above 82.50 and get through that 50-day moving average. All right, a few individual stocks I thought were important. Technology, obviously going higher yesterday. It was led by semiconductors. The best performer in the semiconductor group, Lattice Semiconductor. After pulling back, consolidating, and underperforming for a little while, you can see a big move yesterday on Lattice, up more than 8.25%, breaking back up above the 50-day moving average. I suspect after that uptrend, this is going to now turn out to be some sort of a cup, where the right side of the cup, we move back up to that 95 level. That's what I'd be looking for. One thing to watch, though, AD line broke down rather significantly with this recent selling. So if we do keep going up, let's see if we get that AD line to jump. If not, I'm not sure we're going to be ready to make the breakout. Then we've got renewable energy that had a good day yesterday. Many of the small renewables did well. Look at Plug Power, up 13% yesterday. Not only recently moving back up above the moving average, the 50-day moving average, and holding both the 20 and the 50 on a pullback, but we just surged yesterday to break back out above $10, which is the highest level we've seen in about 2.5 months on Plug Power. PPOs turned negative. AD line, which has been weak, trying to turn up, but you can see the absolute price high took out all the highs from back in April. The AD line has not. So this is a stock that's disappointed over the long haul, and I wouldn't be surprised to see it disappoint again just because that's been its history. So if I'm trading it, I'm getting my money and I'm running. I'm not necessarily jumping in holding for the long term. This stock has a lot to show me in terms of its relative strength, in terms of its AD line, before I'd be willing to just buy it and hold it. Instead, I think it's a trade. Carnival Corp, this is one. Royal Caribbean Cruises, RCL, has been on fire and is one of the leaders in this recreational services space. Carnival Corp, though, is trying to catch up. Big rally recently, taking out the high from back in early February. Look at that volume yesterday on a 12% advance. CCL, these are stocks in this space that have been beaten down ever since the pandemic started. And we've seen a little bit of a rally here or there. This one looks to me to be for real. So I like the group. The group has really been strong. It's been helping the consumer discretionary area out quite a bit. And I look for higher prices. Now, we are getting overbought. Don't be surprised to see a little pullback from time to time, but I think those will be opportunities. All right, 10-year Treasury yield. As I mentioned, the CPI will be out this morning. Right? Well, it'll be out in about 15 minutes, but that's based on current time. You're going to get this recording later this morning after the CPI is out. So you'll want to check futures. You'll want to check that CPI report to see how things are going. But the 10-year Treasury yield has been moving up. My guess is if we come in with a tame CPI number, we may see some buying in bonds, which would send the yields lower. So I wouldn't be surprised to see that if the CPI report is tame or comes in better than expected. If it comes in worse than expected, we could see a big jump up in the 10-year Treasury yield. So some selling in bonds, and also could lead to some selling in stocks. So this is a big report. At this point, I'd say the market's expecting it to be somewhat tame, but is it going to be tame? That remains to be seen. So here is the look at the 10-year Treasury yield. We got a double top in here just above 380. The recent low down around 360. Almost looks like off of this latest uptrend, we've got a little cup and a handle. So a breakout above that 382 level could send us back up to 4, maybe a little above 4 to test the March high. Keep that in mind. One thing that I would mention too is when I'm looking at this chart, I like to put the financials and the industrials down here on the bottom on a relative basis, so relative to the S&P. And in the past, when you've seen the yields trending higher, notice financials lead. They outperform the S&P. Industrials lead. They outperform the S&P. When the yield comes down, we tend to see the opposite. Yield goes up, there goes both groups. Yield comes down, both groups coming down. Yield goes up, both groups rising. Yield comes down, both groups fall. Consolidation in financials, maybe a little downside. Same here. But look at this rally here at the end of May. And look at financials continuing to go lower. Industrials continuing to go lower. Now we're starting to see a little bit of movement to the upside. But this would be another thing to watch for me. If the financials, or excuse me, if the 10-year treasury yield does move back up above, say, 382 and starts to trend higher, I would expect financials and industrials to do well. We haven't really seen that. So at least keep that in mind. We could be in for some issues there. If the yield breaks out, I mean, that would be something I'd look for. I'd look for financials and industrials to move higher. All right, let's move on to talking technically. S&P 500, as I mentioned, up through that 4305 level. I would not be surprised to see shorts covering. I mean, if we get a tame CPI report and we get a gap up this morning, it's going to put pressure on a lot of folks that keep betting against this market, that keep thinking we're in a secular bear market, that we're going to go down. The pressure will only mount as prices continue to go up. Not a whole lot worse, in my opinion, than to be shorting the market while it's in a stealth uptrend. NASDAQ 100, same deal, broke out. The only thing I'll mention here is that we do have a slight negative divergence. If we keep going up, we could see this PPO move to a new high. It is starting to curl again. But if we get a reversing candle, let's say today we get a decent CPI report and we get a gap up, and then we sell off into the Fed announcement tomorrow. So we sell off later today and then maybe sell off in the morning. We get a reversal with a negative divergence in play. That would not be a good look in the short term for the NASDAQ. So keep that in mind. All right, moving on to the chart of the day. So if you like these charts of the day, or you like just being aware of certain things happening in the market, whether it's maybe an individual stock doing something that you need to be aware of, maybe it's a sector, industry group, maybe it's sentiment. I like to report on all these different things. If you want to be a part of our Earnings Beats Digest and receive these types of charts 3 times a week delivered directly to your email, sign up. It's free. No credit card required. You can unsubscribe at any time. Type in your name, email address, hit that subscribe button. We'll get you set up. Again, Monday, Wednesday, Friday, 8:30 in the morning is usually when we try to send it out. Occasionally, I'm running a little late, so it'll go out a little bit later than that. But normally, we do strive to get it out before the market opens. And it's a simple read. 2 paragraphs in a chart is the way I normally describe it. And so you get a quick analysis on something that we feel is important at Earnings Beats. So make sure you sign up. Also, when we have free events, we always reach out to our Earnings Beats Digest community, and we're going to have one of those events coming up in just a couple of weeks. So make sure you are on this list in order to get that invite. If you want to try our service, we always have a 30-day no-cost trial, where we've been doing that for a long time. So you do have to give credit card for this one so we can get you set up in our system. But otherwise, 30 days for free. It's a long time to check out our service there. And the reason we make it that long, we've had different iterations of this trial where we've had 7 days, 14 days. The reason we have 30 days is we offer so much information that a lot of times it takes a while for our members, new members, to kind of get on board and understand all the things that we do, all the research we provide, all the guidance that we give our members. And so 30 days seems like a pretty reasonable amount of time to check out the service. All right, chart of the day, Boeing. This is one back in January when we broke out above the December high, and previously we had broken out above the August high. I said back then I thought Boeing could be one of the best stocks of 2023. Well, wasn't exactly a great call because Boeing went into this sideways consolidation. It wasn't bearish, but we went into this sideways consolidation for several months. Now, the good news is we never lost price support. So when we broke out, I mean, right here was the high. If you look at every other breakout here, this breakout, we pulled back to test the area of the breakout. We move up here, we pull back, we test the area of the breakout. We break out, pull back, test. Break out, pull back, test. Here we broke out and kept going. And so notice it took a couple of months to come back and test this area. And we've done it multiple times, but we never failed. 195 was great support. Just under 220 was big resistance. Yesterday, look at the volume pickup and the close above 220. Finally got a breakout on Boeing. Gained only 2% yesterday, but that could be the start of another uptrend. Look at the 20 crossing above the 50. Any pullback to test that 20-day moving average, I'd be a buyer. All right, let's move on. I want to talk about relative strength and go through these sectors. I only have about 5-6 minutes left, so we're going to go through pretty quickly. Technology leader right here. This is going back 5 years. But you can see on a relative basis, technology broke out. And again, this is a relative basis. Look at the absolute chart, almost ready to move to an all-time high. We've seen some individual stocks. We've seen some industry groups. And now we're looking at one of the key sectors about to break to an all-time high. It's not going to be long before we see the QQQ and the spider break to all-time highs. I think you're going to see the QQQ do it first because we're a lot closer, but I think they both break out in time. It's just been one thing after another moving back up and clearing all-time highs. Technology almost there, but this is major resistance. Another reason why, this move up, if we do continue to move up, I would question whether or not it continues because we do have major overhead resistance. All right, discretionary. Look at that relative PPO breaking back up above the zero line. Finally, breaking above the February high, turning up. If you draw a line from these two highs, we have broken that downtrend line. And on an absolute basis, we took out the highs around 150, and we've gone up a quick 10% in the last month. Next stop, up near 170 to test that August high. Communication services leading, moving up. These are the three aggressive groups, and they all look great. On a relative basis, communication services has a long way to go to make up what they lost over the course of about 14 or 15 months, but it's well on its way to doing that. The other aggressive groups, industrials, pulling back close to this breakout level. I think we're going to start to see industrials move back up again. Look at the industrials trying to get back through to all-time highs above 104. That's pretty impressive. Financials. This is the one aggressive group that continues to just languish. It's been a laggard for a while, continues to be a relative laggard. Banks, life insurance companies, some other areas, investment services, all of those really holding back the group. Healthcare, big move up. Now it's moving down. Remember, this is a defensive group. Now, while you're looking at the relative weakness, do you see absolute weakness? I do not. Nothing is breaking down. Healthcare is holding on to support. Here was a big move up on an absolute basis. Here was your pullback, and we've been in this trading range. We're going to break out eventually, but we are going to probably lag. We'll break out, but we won't break out and work out and move higher as quickly as we do on the S&P. Consumer staples rolling over on a defensive basis, but it just recently was up near an all-time high. Nothing wrong with the absolute chart. Real estate. Real estate's the one that has been moving down, although we still are above the October low, and I think that holds. You can see relative strength has broken that October low. Absolute strength has not, but it does remain one of the weaker areas. Utilities, also very weak on a relative basis, but the drop back in October, so far that low is holding around $61. So nothing really bad technically on the absolute chart. Energy, relative basis, not so good. Absolute, still fine. Materials moving back down on a relative basis. Again, on an absolute basis, here was the high, all-time high. Here was that low in September. And we've been trading off of that low and consolidating, just moving sideways. So I think the setup here still is extremely bullish. I don't know how anyone can look at this and see those aggressive groups leading the market higher, breaking out above key levels, and seeing even the defensive groups. Obviously, if you've got aggressive groups leading, the defensive groups have to lag. Something has to lag. Everything can't lead the S&P. But when you look on the absolute charts, there's nothing wrong technically. Real estate, probably the weakest group. But other than that, just consolidating. As we move higher, I expect all these groups to break out, but they're all not going to lead. The leadership remains with technology, communication services, and consumer discretionary. All right, let's talk about earnings spotlight real quick. So here is the pre-market action right now on Oracle. It's up $6.37 after reporting earnings yesterday, and after jumping nicely on the day yesterday. We were up almost 6% yesterday, another 5.5% today. That is a huge move on Oracle. We are quickly pricing in future growth into a pretty large stock that normally doesn't really move that fast, but it is moving right now. The other chart that I want to show you is Adobe, which we'll be reporting on Thursday after the close. Look at the stock breaking out. Look at the AD line setting new highs. Look at the relative strength moving up now to about a 4-month relative high. Stock is setting up probably for a pretty good report on Thursday, but you do have a lot of in-the-money call premium. Like I said, could be a volatile week. All right, I'm going to go into the 3 you must see and wrap this thing up quickly. First, we've got Micron. Here was a big move up and the pullback. The problem with Micron, look at it relative to semiconductors, not so great. It did yesterday start to break back up above the 20. AD line's been pretty strong. Maybe we're going to resume that move and head back towards 74, but I do have a problem with the relative strength. The next stock, DaVita, this is in the healthcare area, gapped up back in May, a little over a month ago, and has been sideways consolidating for a while, but it remains one of the strongest stocks. Watch for a breakout above 102 or so. In the meantime, any pullback to the low 90s looks strong. And then the last one I have for you to wrap up the show, Copart, CPRT, AD line great, price action great, one of the leaders in transportation services. But the last 3 weeks, it hasn't really participated, pulling back, hitting the 20-day. We could see a move right here off this 20-day. All right, that's it for me. I appreciate everybody tuning in. I'll be back tomorrow over at Earnings Beats for your next Trading Places Live. Have a great day, everybody. Happy trading.